Turns out Nvidia's mortal after all. Even though it reported a great quarter last night, it wasn't able to deliver its key product fast enough to allow the company to do what it's done so many times before, blow away the earnings. Yeah, raise its forecast to unfathomable levels. Nvidia didn't define today's trading because it failed to dazzle in the way that so many money managers had come to expect. Didn't even seem to matter to the averages, though. Dow advancing 244 points, S&P basically flat, NASDAQ dipping just 0.23%. My response to all this, all I can say is, goodness gracious. With this quarter's results, the albatross of perfection is now gone. The millstone shredded. As much as I love Nvidia, I'm thrilled that we can finally return to a market where there are many important stocks representing many important trends instead of one stock that's captured the attention of legions of investors, many of whom have no idea what it does, let alone where it fits into the technological food chain. I stand by view that you should own the stock of Nvidia and not trade it. After all, I've spent days warning you that the buy-side expectations were too high, and the stock had run way too much going into the quarter. I told you the company needed to deliver a gargantuan beat and raise quarter in order to make it rally, something that seemed very unlikely, if not downright impossible. But I never backed away from my belief in the value, the ultimate value of the company. What I'm saying is that, in the end, Nvidia isn't a concept. It's not a cult. It's not a miracle maker. It's a company that designs really fast chips that allow for rapid calculations that help companies speed up the solving of problems while improving productivity. You can't ask Nvidia's Blackwell chip to cure cancer. Can't do that. It won't put a man on Mars. It certainly can't bring about world peace. Yet when you look at how this stock was trading in recent weeks, the market was basically asking CEO Jensen Huang to do all of these things and more. Instead, right now, it looks like it can expand customer gross margins. Important, but not earth-shaking, especially because the enterprise is the client, not you. You won't even see it. Now that this quarter's in the rearview mirror, my hope is that those who wagered on the stock, notice the word wagered as opposed to invested in the company, will finally move on. No more exacta box with AMD to place, please. We have to go back to a world where we try to value Nvidia like any other company. We have to put a reasonable price to earnings multiple, PE multiple on it, given its growth rate. Wall Street analysts are saying Nvidia can earn $5 per share in 2026, which I think is a reasonable time frame when you're evaluating a big growth stock. We have to figure out what it should be worth based on that dollar number.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.